Clearspeed helps insurers make better and faster decisions at scale by analyzing voice in a unique way. Their AI-powered technology enables insurers to accurately identify the risk of fraud, so that low-risk transactions can be expedited and high-risk cases flagged for expert follow-up. In this session, Clearspeed will share their vision on disruptive innovation opportunities in the insurance industry by embracing new technologies and learning from developments in adjacent industries. Please welcome Clearspeed.
Hi everybody, my name is Manjit Rana. I'm the GM for Clearspeed, and this session is really about kind of talking about innovation and disruption and where we see that coming from over the last couple of years. So if we kind of just look back at what's typically been happening in generally big organizations. So if you look at like the Fortune 500 companies over the last 20 years, about 50% of them have disappeared in the last 20 years. And they've disappeared because they've gone bankrupt, they've been bought out, they've become irrelevant. And that's happened across a whole sector of industries. So we really have to think about what is that going to happen in the insurance industry? It's inevitable that it's going to. So if we have this conversation again 2, 3, 5 years down the line, which of those recognized brands of ours are not going to be here? And the next generation of customers not even going to have heard of some of these names. And how do you stop that? And it's typically that it's going to happen because of disruption in the industry. Models are going to change. The way our products are designed is going to change. And how do we make sure that we're in control of some of that as opposed to it happening to us? So that for the next kind of 25 minutes, the conversation that I'm going to have with you guys is really about what's going on, what are the trends that we're seeing, how do we use that to our advantage, and how do we protect against some of the stuff that inevitably is going to come and hit us left field. So generally, when I'm typically having a conversation about innovation, and everybody has an innovation program, virtually everybody now has a venture building program as well, but no one's really innovating. And when you actually ask people what the reasons are, so I typically get the same old 4 or 5 reasons. I'd love to know from you guys what's stopping, what do you think those objections are? What do you think those barriers are to innovation? Anybody want to suggest anything? So what is stopping companies innovating? Come on, somebody must have a suggestion.
Focus on operations.
Okay, that's good. And so response there was too busy focusing on current operations. Okay. The other one that I constantly hear is people saying legacy systems, but bearing in mind virtually every one of the top 10, 15 insurers have all spent over $100 million on improving their legacy platforms over the last 3 to 5 years. They're still talking about legacy issues. I don't get that. People talk about it's not my problem. It's not my job to innovate. So why should I be worried about it? And all, the culture's wrong, the regulator's going to not allow us to be innovative. Those things apply to every single industry, and they equally apply just as well to the insurtech community as they do to the large corporates. So then they're genuinely not valid reasons. A lot of the big reasons as to why companies struggle to innovate is because of the legacy thinking, not because of anything else. It's because they think in the old traditional way they've always thought. And as a result, and as a result of the fact that we're not as great at attracting fresh talent into the industry, that is a major problem. So some of the stuff that I'll talk about is kind of like thinking about, okay, how do we get around some of those issues? So the main topic really is who's actually going to be eating our lunch over the next few years. And the options are, existing insurers, so kind of your competitors, if you're an insurer. Pretty unlikely to happen because, to be honest, there isn't really any insurer that's so innovative compared to everybody else that they're going to suddenly come along and change the world. Insurtechs, I probably would have said 5 years ago that that's a really strong possibility, but it's unlikely to happen now because of the fact that funding has dried up in the marketplace, or is drying up in the marketplace. A lot of those insurtechs have evolved into being to help insurers evolve their business as opposed to disrupting the business. So there's not many insurtechs around that are directly trying to take an insurer out of the market. It's more about trying to help them get better at what they're doing. So that's unlikely as well. Another option could be a brand new player that nobody's heard about is suddenly going to come along. In Europe, in the US, that's possible. In Europe, highly unlikely, because again, generally that's not the way that as European consumers that we react to someone that's brand new and engage that quickly. That kind of only leaves adjacent industries. So the car manufacturers, the home security companies, companies that already have access to data, they have access to consumers, they have a brand, they have money, they have resources. So kind of everything that we should be worried about when we're kind of looking at a potential competitor. So if that's where a potential threat is going to come from, then we really need to think about what advantages do they have that we're not looking at or we're not using to our advantage. So if you kind of look at disruption generally, where does that come from? It either comes from people trying to create a brand new market category, a product or proposition that just doesn't exist. Last one I can think of in the insurance industry is probably cyber insurance. I can't really think of anything else that didn't really exist. And I'm not talking about slight tweaks or stuff that's evolving. I'm talking about a fundamental, brand new type of stuff that just didn't exist before. I don't really see anything else that's that game-changing is going to create a brand new market category. Disruption also comes from just tweaking around, what I call tweaking around the edges, so kind of fine-tuning, improving existing processes, existing products. And if you look at most digital transformation programs, that's typically what's going on. It's really about taking the existing stuff and just digitizing it. Put a website over the top of it, create an app, but it's still go to a website, fill in a whole load of questions, get a quote for your car insurance, and then buy an annual policy. We're not really disrupting anything. We're just making it a little bit easier. Or you have a whole bunch of other industries that are kind of looking at a marketplace and they're going, actually, we can do that better. And that scenario generally happens when they're losing money themselves or they're really suffering financially. And they need to find some new way of growing their market share, grabbing more share of a customer's wallet. And then they get tempted to look at disrupting other industries. And that's kind of what's happening right now. Car manufacturers, home security companies, telcos, all big retailers, they're all looking at how they can make money out of the consumer that's buying insurance at the moment. And we'll touch on some of those a little bit. The other bit that is the trigger for disruption is when something fundamentally changes in consumer behavior. And COVID was a big one. Even if we look at our employees, we were all adamant it's very difficult for people to work from home. You have to have face-to-face meetings. Literally, COVID changed that overnight, and we proved that actually we don't have to have 500 people working in a call center. They can work from home. They can be just as productive. And actually, I don't have to fly to Germany once a month to have a meeting with a particular insurer, because we can do all of this stuff without. But we were forced into that situation because voluntarily we didn't really think that was the norm. So if you kind of look at typically where disruption has happened in other industries, if you look at the car manufacturing, the OEM space, so I'm pretty sure people like General Motors, BMW, Ford, all knew about electric cars, all knew that was a possibility, all knew that was an option going forward. Yet none of them really did anything about it because no customer was sitting there screaming for an electric car. They were very comfortable selling petrol and diesel cars and just competing with everybody else. And then a bunch of weird guys called Tesla came along and said, we're going to build a completely electric car. And it completely disrupted the marketplace. Okay, it didn't take off as quickly as they expected, but every single car manufacturer now has electric cars in their portfolio, and most of them are going to have to move completely to an electric portfolio by 2025, 2030. I think everyone has to have done it by in Europe. But what did the Tesla guys know about car manufacturing? Nothing. They knew more about batteries than they did about cars. If you look at Dyson, the vacuum company, they invested about 3 years ago, they invested $1 billion in buying a car manufacturing plant in Singapore because they believed their electric motor technology was that good, they could actually become a car manufacturer. In the end, they put it on hold. But that's a vacuum company thinking they're going to take on the likes of Ford and BMW. That's a pretty brave decision, but they threw $1 billion at it. That's a big risk, but that's the kind of disruption we need to be aware of as an industry. And there's loads of other classic examples. Blockbuster got disrupted by Netflix, by taking away, not having the consumer walk into shop, go down, pick a particular film, and then find that somebody else has already rented that one out. Taxis, Uber disrupted that whole market space now. It's kind of, we all fully expect to be able to order a cab and watch it kind of arrive to where we need to arrive. But also, it changes things like it gave the taxi driver a choice if they want to pick me up or not. And if I've got a really bad rating, they're not going to pick me up. So whereas previously it was the consumer that was in control, now it's the taxi drivers that have equally the same amount of control in terms of if they want to be part of that transaction. Which kind of leads me on to connected cars. And the reason I wanted to touch on connected cars was really about the amount of data that's now being generated by these. So the car that you're driving, if you have a car that's less than 3 years old, it's probably generating about 4 gigabytes worth of data a day. Now just stop for a second and just think about what that means. If you're an insurer and you want access to this data, how are you going to ingest that kind of data? Okay, you don't need all of it, but how do you know what you need out of that, and how do you know what you don't need? But your systems are not geared up to ingest that kind of data, and actually, do you even know what to do with it? But insurance is all based on data, based on facts, based on history, based on statistics, so we do need access to this. And as cars move towards autonomous vehicles and semi-autonomous vehicles, that's going to go up to about 20 gigabytes worth of data a day per car. So just think about the scale of that problem when you're trying to create a next generation motor insurance proposition. But then kind of think about who owns that data, who is managing that data. So the car manufacturer has a phenomenal amount of data about the way the customer's driving, whether the windscreen wipers were on, if they have an accident, how severe the accident is. So if you kind of look at it as a next generation proposition, so if I have a bump in my BMW, what's going to happen? Am I going to ring my insurance company, or before that happens, am I going to get a message in my car saying, "Hey, Mr. Rana, appeared to have had an accident. Don't worry, BMW rescue vehicle on the way. It's going to pick you up. It's going to take you to the nearest BMW garage. By the way, there's a replacement BMW waiting for you to drive away in. Oh, and don't worry, we're going to let your insurance company know your vehicle's in our body shop." Now, think about what impact that has on an insurance business. My entire supply chain, my network of body repair shops that I've spent years building, all of a sudden, they're no longer relevant because I have no control over where that car's going. The consumer's not going to take their car out of the BMW workshop to go put it into a third-party place. And actually, these cars are now so sophisticated. Can your average body shop actually even repair one of these things? And when they repair them, can they calibrate them to make sure they're still under warranty? So they're going to have to go back to the likes of BMW or the main dealer. So those guys now have far more control over the claim process than we have as insurers. So how do we stay relevant? How do we make sure we're in that conversation at the point where the customer's getting the service that we've actually sold them? So again, something to think about. The same thing happens across a whole range of other areas where we're providing cover. Let's go a little step further. You've all seen the motorhomes, caravans that people are towing behind their cars. Let's combine one of those with autonomous car technology. And all of a sudden, you've got a mobile office and a mobile hotel room. So if I'm in London and I need to be in Edinburgh, do I really need to go to a train station, lug all my stuff, sit on a train, or take a flight? So I've got to turn up at the airport in advance. Or do I just have one of these things pick me up, drive me up to Edinburgh, and actually, while I'm being driven up there, I can work, I can sleep, I can get Amazon to deliver my food to me into the roof box while I'm still traveling. So what impact does that have on a whole bunch of industries? Service stations? I don't really need to stop at a service station because the food's going to come to me wherever I am. So why do I need to stop? I don't need to stop for a break because actually I can just go to sleep. This thing's driving me anyway. Hotels. Do I need to book a night in a hotel? Well, a major hotel chain is building hubs to be able to have these things dock in. And as it docks in, you open the doors and you're in the corridor of a hotel type environment. So they're already thinking about that, but what are we as an industry doing? What are we thinking about in terms of where we play in that equation? And most car manufacturers are now creating subscription-based pricing and giving us the option of being able to swap our car. So we might have an X5 BMW during the week and a convertible at the weekend. But on a Friday evening, is the consumer genuinely going to ring up and ask their insurer to change the cover to a different vehicle? That sounds too painful. And I'm pretty sure it's not going to happen. So insurance is just going to get embedded inside that subscription service. The likes of BMW and Porsche are doing journey-by-journey insurance propositions now. So literally it tells you if you go down route A, it's X to insure the vehicle, route B, and it's a different price. Porsche actually have developed some technology where their car sends out a message saying who wants to insure the car while it's in a part of, say, Nottingham, who wants to pick up the risk when it's on the motorway, and then who wants to pick up the risk when it gets into London. So their technology can already do that. There's no human involved. The human's not actually asking for a quote. The car's asking for a quote. The problem is not a single insurance company can respond to the risk request to be able to provide a price. So they're now looking at creating their own insurance company because literally none of the traditional insurers can provide that service. And generally, what is this all about? It's really all about data. Fundamentally, that's the difference. Other industries have access to data that we don't have access to. And I hear arguments, oh, that's fine, we'll go do a commercial deal, they'll share that data with us. You could, but are they that interested in doing that? Or have they spent the billions of pounds invested in technology to generate that data for their own benefit? So again, it's not that straightforward for us to be able to actually just go buy the data from somebody else. I think Tafine mentioned this earlier. She was talking about technology that can actually, you can look into a phone and it'll do you a health check. So I can't remember the company she mentioned, but the one that I'm aware of is called Bina AI out of Israel. So if you haven't had a look at that technology, it's staggering. It's amazing. You literally, while you're on a call, it's literally checking your blood pressure, checking your stress levels. And that technology is now being combined into bathroom mirrors so that when I'm there brushing my teeth, it's automatically giving me a health check, real time, every day. So not once I book a doctor's appointment, which is virtually impossible, it's literally giving me a health check real time. Companies that are producing smart socks, where if you're an elderly person, instead of being asked to wear a Fitbit or an Apple Watch, which you're not really going to get on your wrist if you're 80 with arthritis. But if you're wearing the socks, I can do dehydration readings. I can do your ECG real time. I can detect if you've fallen. I can detect if you normally wake up between 9 and 9:30, it's now 10, and you're still in bed. That's kind of looking at next generation propositions. So rather than waiting till somebody has a claim, why are we not creating propositions where we're preventing the nasty stuff from happening in the first place? Gives us an opportunity as insurers to create more relevant products and a more relevant engagement with our customers, and a better relationship with our customers. But if we don't do that, there are companies that have access to this kind of technology where they will create these propositions. And then we're competing against somebody that has that kind of preventative proposition against us trying to sell a healthcare policy to somebody for a fixed premium, pay monthly or pay annually. And the next generation consumer is just not going to buy into that. And if you kind of look at where you see disruption, where it comes from, it very, very rarely comes from within the industry that's being disrupted. It always comes from somebody else who's typically frustrated with the problem or the pain point, or somebody that's looking at the problem through a completely different lens. And just to give you a good example, so Clearspeed, the company that I work for, so they developed some technology based out of military operations. So imagine this scenario: you're all in an American base. I randomly walk up. I say I need to come in. The guy guarding the entrance has no clue who I am. Literally, I don't speak English. He can't vet me. He has no idea who my friends are, who I'm affiliated with. But he has to make a decision: am I safe or am I not safe? How do you do that? And how do you do that at speed, and how do you do that at scale? So they developed technology by just asking 3 simple questions, and the questions are not really relevant, but you ask 3 questions, yes or no response, and in literally any language, and they will tell you with a very, very high degree of accuracy whether there is a risk in those responses in that person or not. And it's all done by analyzing the voice. Literally, the burst of sound energy when you say no is enough data for us to be able to say, that's risky, that individual isn't. So kind of looking at applying that across different industries. So in insurance, we can use it in underwriting. If we're selling a funeral policy, is that person actually alive at the point where the policy is sold? So without sending somebody out to go meet this person, we can ask at the point of instigating a policy. If any of you, leave here and say, oh, I left my phone at the conference, and make a claim, how does the insurer prove that you genuinely did leave your phone? We can ask you for receipts, we can try and cancel your network, or we can ask you 3 simple questions and actually determine whether you genuinely have lost that phone. So that's taking technology from a completely different industry, completely different environment, and applying it into an insurance use case. And because the original use case was so important, the accuracy was so important, because if you get it wrong, someone's going to die. The accuracy levels are way higher than anybody designing a solution for the insurance industry, because no one worries about 97, 98% accuracy when it's insurance fraud. So typically, kind of like the 3 main areas that are impacted by disruption, or what's stopping us from being able to disrupt. So talent. In the UK alone, right now, there will be 800,000 new graduates coming out of universities. And I wonder how many of those are sitting there going, oh, can't wait till I start my job at can't wait to start my new job at an insurance company. Not that many, but why is that? We have a super interesting industry, yet we're not attracting the talent to come in. And if we don't attract that talent in, how are we going to innovate? Because we're not thinking the way those guys think. Now, I was doing a workshop with a particular university, and the insurance partner went in and said, okay, we have a real big problem with cars being damaged and stolen. And one of the students put his hand up and he said, I assume you know which street their cars are being broken into because you have all the data. I'm pretty sure you know that. And the insurer's going, yeah, we know that. And they're going, okay, why am I not getting a text message saying, John, don't park here, go park in a car park quarter of a mile up the road and we'll give you a 50% discount on the parking. And the insurer's going, because we can't contact you. And they're going, I've got a smartphone and it's literally glued to me. Like, you're able to communicate with me. And again, that's the difference between their expectations of what they want from a proposition compared to what we think they want as insurers. Consumer behavior is changing. Literally, everybody's living their life on mobile phones. And as a result of that, the amount of data that's being generated dynamically, we are not taking advantage of. If you think about if you have a telematics app, which a lot of insurers have got now, I could use that data to determine if that person has a dog, because I can literally see the data and say, every evening around this time, this person's going for a walk along here. And we know he's walking, and it's the same old walk. So there's probably a high degree chance that they have a dog. So why are we not using telematics apps to be able to do that kind of marketing? Because we have the data, but we're not doing it. So I'm just going to speed up a little bit. The emerging technology we've been talking about. So little kind of thing for you to think about. What if one of these companies, and generally everybody says, oh, we don't need to worry about Amazon and Google and these and Apple, because they're never going to become an insurance company because they don't understand how to become an insurance company. But what if one of these companies, one of these brands bought an insurance business? And let's say it's you guys. And now you're sitting in the first day meeting and BMW says, okay, we now have an insurance company in the group. What can we do with it? And think about the kind of propositions they'd be able to create. Yeah, and think about all the assets they have and think about all the data they have. What if you are now part of that company, what could you do? But we don't have to wait until that scenario happens. We can literally have a meeting, connect those companies together. And what if you connected BMW and Shell and Alarm.com together? Then what kind of proposition can you create? And these kind of conversations are now starting to happen across other industries, which is what's forming the basis of a lot of ecosystems in the marketplace as well. But I rarely see anybody from the insurance industry in those discussions. And I really think we need to be a part of those conversations. Otherwise, we're going to get swallowed up as a part of those ecosystems without any real control over what's going on. And if you look at kind of today's customer, there's a whole, the whole gig economy industry is exploding. But kind of think about, this Uber delivery rider, what's his needs? He probably doesn't have income insurance, loss of income insurance, because he probably doesn't understand what loss of income insurance is. But let's say he gets knocked over and he's out of work for 6 weeks. Who's going to cover his expense? Who's going to cover his salary levels? So is he going to go out looking for loss of income cover? No, because he doesn't believe he's going to get knocked over. Why don't we bundle in loss of income cover with the purchase of his bike? And that's embedded insurance, right? It's easy. If he drops his mobile phone, again, we can use parametric insurance models to say the phone's dropped, we know the screen's cracked, why don't we automatically send him a new phone? Why does he need to file a claim before he can actually get access to that service? And the whole host of consumers are working from home at the moment, and they're now very comfortable having the flexibility of being able to spend time with their families as well. So how does that change the proposition? The likelihood of their home being broken into has probably dropped quite dramatically. Burglars are not going to break into your house when they know someone's already in there. So what are the services they actually do need to have? What kind of claims do they need to think about? What are the risks that they're trying to manage? And again, I've not seen any product that seems to be relating to that kind of opportunity. And again, if we don't do it, somebody else is definitely going to come along and do it. Kind of same point, the fact that the kind of technology that's in people's hands. So, we're able to do, with technology, we're able to determine how many people are in the house. we're able to determine who's coming to the house. If my cleaner's saying, oh, Manjit, I came in at 10 o'clock this morning and I left at 4 in the afternoon. Just by the fact that her mobile phone, as it came up the drive, connects to my Wi-Fi router, I can tell that she came in at 3 and left at 5. But again, you could turn that into an insurance proposition. If my 85-inch smart TV leaves the house, why is that not automatically sending an alert? Because clearly that it shouldn't have moved. So, to kind of just summarize up from this. If you're really going to, so my personal view is we're kind of still doing innovation theatre type stuff. We're probably a little bit better than we were a few years ago, but we're not really seeing any dramatic innovation problems, and innovation solutions or innovation methodology. And a lot of that is because we're not really focused on the customer experience in terms of what the next generation propositions are going to look like. We're too focused on how we improve the customer experience that's today. We're definitely not innovating around employee experience. A few years ago, my son got an opportunity to work for an insurer while he was waiting for a proper job, as he described it. So at the end of 6 weeks, he resigns when his proper job had started, and his exit interview, he got asked, okay, so, A, why are you leaving? B, what did you think about the system that we've just spent the last 6 weeks training you on, ready for your job? And his response was, it's a bloody good job. It's not the new system that you're spending 50-odd million pounds implementing, because this one's terrible. And they went, that is the new one that we're spending 50 million pounds implementing. And that's the difference between his expectations and what the business thought was the state-of-the-art system. Clearly, the two things are very, very misaligned. So we need to think about the experience for our own employees as well, because they are a massive reflection on the way that these propositions are going to be designed for the consumer outside. Generally moving the business model, and again, a lot of people talk about this, but I'm just not seeing enough movement through this, kind of moving from the fix something when it's damaged to the how we prevent the nasty stuff happening. There are a few companies starting to tinker around that, but we really need to speed up that model, because that is a massive threat to us as an industry. And then when you've done that, optimize it, and then kind of start moving up. Everyone's kind of talking about driverless cars. I don't think we need to worry about that. They're going to happen. We're not going to stop that, but we need to be looking at the connected mobility opportunity and what we can do there, because that's what we can protect right now. That's me. I think I'm right on time. If anybody has any questions, I'll be in that corner. By all means, come grab me. But thank you very much for your time.